Hey everybody, good afternoon, good evening, wherever you are. Welcome to Ready Set Crypto. My name is Doc Severson, and today is Wednesday, the 4th of October. All right, let's get into it here today. Welcome aboard, everybody. We're going to be going over some charts for about the next half hour or so. That's usually about when we wrap things up, is the top of the hour here. I would love to know where you're coming in from. So we have like Robert from Slovenia coming in. We got usually people from all over the planet which join us here, and we talk about charts for the next 30 minutes, and we see what's going on with markets. There's a lot going on with markets these days. A lot of this is around the debt markets that are out there. So looking at things like this, the U.S. yield for bonds right now for, this is the 10-year note. This is coming up near 5%. And this is driving things like mortgage rates. These are driving things like, the auto loans. Just about any other form of debt is going to be on top of something like this, because usually what you spend is more than what you receive from an investment. So financial companies keep the difference between there. But man, this is on an unsustainable ride. Here you can see this one is setting up this sort of cup with handle pattern, and this is targeting about 5%, 5.5% or so. And we got John coming in from, let's see if I can pronounce this right. Is it just straight Wheat Hampstead? So, hey, John, thanks for, I don't know where Wheat Hampstead is. Not sure where that is. I'm sure, let me know. Because I gotta brush up on my UK geography. All right, Justin's coming in from North Carolina. What do I think about the NASDAQ? Okay, thank you, John. Yeah, at least I didn't say something like Gloucester or something like that, or one of the Americanisms to this. Hey, we got Jack coming in from Darwin. Hello, everybody. Thanks for joining in. Hit the thumbs up button if you get a chance so you can let everybody else know, beat the algorithm, and attract some other folks that are coming in. Okay, so that's the debt markets. That's what's going on with the debt markets, and that, unfortunately, is affecting what's happening with just about everything else. Like if we look at the S&P 500, S&P 500 is down over 8%, coming down to the green line, which is the 200-day moving average. So after going through a whole bear market last year and popping out to a nice bull in June and July, it's been nothing but downside since. And we're talking about trillions of dollars. Hey, David, coming in from Mexico. All right, glad to see you. So part of that is the NASDAQ, and the NASDAQ is actually the biggest driver of this. So that's Justin's question. So we're going to go into the NASDAQ here. What do we see? The NASDAQ is actually holding up really, really well compared to everything else. And so right now what you've got is what we call a little Darvas box. Darvas box is basically going from about 14.4 up to maybe that's 14.9. So it's about a 500-point move. Now, if we see, let's see there. All right, I'm going to scrunch this together. And so from this box, what I would expect to see, again, here's the decision box on this. This is the way we do it. So let's go ahead and throw some fibs on here. It's okay. It can actually break higher from here. It's done the hard work to break higher from here. You can see that we've only seen a 23.6 retracement on this. Now, If the price were to break lower, I think it would find support right around 13.9. About 13.9 is where you'd probably find some support. Below there, 13.2 on the NASDAQ. Again, this is the NASDAQ 100, so this is the biggest 100 from the NASDAQ. So that's where we'd probably find some support, but we could just as easily see this break higher. A lot of this is going to come down to Friday's jobs report. A lot of this is coming down to Friday's jobs report. Justin, let's see. Hey, Didi, coming in from Norway. Thanks for checking in today. Do I think the NASDAQ could be showing a double top from the monthly chart? Okay, let's take a look at the monthly chart, shall we? All right. And that is going to be, let's see, where are we going? Double top on the monthly chart. Okay, so yeah, this has been this has been a concern of mine, is that, yeah, let's reset this. This is what I'm seeing across the board with a lot of markets. What you want to see now, this whole bear market in here from 2022 and early 23 is very normal, right? So on a monthly chart, it just looks like a pullback, whereas for all the time frames that we deal in, which is the weekly and the daily and so forth, you know, it's carnage out there. But this is all very normal when we go through something like that. Here is, if you can believe it, here's the pandemic move that with barely anything, right? So this has been a pretty serious bear market in 22. So to maintain the uptrend and maintain this polarity, the price needs to break above this level here. If it sets up a lower high, that could be start of the reversal process. So if you see something going like this, this is how a reversal works. It works to a lower high, and then all of a sudden you get this incredible bull trap in here, right there, and then it releases to the downside, and then you get the change in polarity to a downtrend. So now it's making lower highs and lower lows like this. So get used to looking at this whole thing. So I think there's something to your question here, Justin, is that, yes, this could be something, but it all depends on what happens with the next swing. So let me explain that. The next swing will tell us what's going on. So if we do get a rally up from there, that's going to be initially good. But a couple of things. It's going to have to break through this trend line, and eventually it's going to have to get past 15.5, which is the former highs from late August. If it cannot do that, if we're just going to sit there and trade down like that, then the corrective pattern is probably going to expand to the downside. And the market could be in trouble. And, you know, you look forward at 2024, and I think just about everybody sees trouble going forward. But think about it. Didn't we see the same thing in 22 and said, boy, 23 is going to be a terrible year? And it's actually been okay, unless you're in the small caps. So this is something that we have to watch out for. So good question. I don't know what's going to happen in the future. I'm not going to pretend that I know what's going to happen 2 months down the road or anything like that. But what I want to see is how the price handles this break in here, this consolidation, this Darvas box, which way it breaks from that. That will tell me how to position myself based on the attainment, if it can break above these levels here, or whether it's going to pull to a lower high and then roll over again, which would be bad from there. So if it's able to retain the bull from here, then we could go on for several months because the energy is definitely pulled up. Okay, so guys, let me know what else you want to look at. I'm just going to start out here with Bitcoin and tell you what I see on Bitcoin. So for right now, what I'm looking at for Bitcoin goes back to the monthly chart. So let me know what pairs you guys want me to look at here in the next 20 minutes or so that we're together. What I want to see is similar to what we saw in 2018 and in 2020, is that both of these, we were sort of big bear. I think you could. This is all one big bear, but this is two distinct swings within here. Each of these had a significant higher low on the monthly chart, significant higher low. And so we haven't done that yet. We haven't done that yet. So here's what might happen. This is what I'm thinking of might happen, and this is what I talked about in today's newsletter video that I put together for our premium members, is that we may have a debt bomb going off. So if yields continue to go higher like this is going to put pressure on everything else. The government is going to spend more and more and more money every month just paying interest on the note, because it's not a fixed interest rate loan, right? So they're going to spend more and more of that until it becomes absolutely unsustainable. So it's a vicious cycle, in which case we may have an utter collapse of things. Now, if we do have a collapse in the traditional finance world, everything gets thrown out. So don't think that just because, hey, it's Bitcoin, it's going to be insulated from that. Because you go back and look, I mean, even during the pandemic, everything got thrown out the window because of margin calls, redemptions, everything else like that. People will sell anything that's liquid just to come up with cash because they have to. So if we have some kind of event, it will not spare crypto at all, at least initially. But then what's going to happen is people are going to say, hey, wait a minute, this shaky fiat currency that we have has no, if you look at something like Bitcoin, which has got its 21 million and, limited supply, and all of a sudden it's going to be very much like March back here, where we had bank failures, and all of a sudden Bitcoin shot straight up because all of a sudden it becomes that sort of shining star safe harbor. So that may happen. We may get our higher low based on a little bit of a crisis happening at some point here. Who knows how long it's going to take for that. But I would say, guys, if you still have faith in Bitcoin, as I do, then continue to dollar cost average into it. Continue to put up, weekly contributions or monthly or whatever you can do. Continue to drive your cost basis down on your investment, especially if you have years and years and years for this to play out. Eventually, we will get the next bull run, and you have to be in it to win it. You can't wait until things feel good to start participating, which is what most people do. You've got to be participating in periods of agony like this, where it's going to test your faith. But those are going to be the biggest opportunities that you're going to see over the next couple of years. Okay, so I'm going to go over to, let's see, we're going to go back to Norway here for VRA. We're going to go to VRA. Oh, yeah, just filled a trade. Awesome. Okay, so we're going to go Veracity. We are going to go to Veracity, and Veracity is starting to have some volume coming in. So this is a good looking chart. Now, longer term, this one still looks terrible, just like everything else. But we're starting to see this one waking up. So you're starting to see that. Here's the clue. Here is the volume. Volume is always the key towards what's happening here. Oh, damn it! I'm so close to that. Okay, so volume. This is a nice move. I'm going to have to start watching this one. Now, this is going to be a long base. This is going to take a while to get out of jail and purgatory down here. So I would say 1 penny. 1 penny is going to be where things eventually will get clogged up. But this is a nice trade for right now, and it's starting to. The volume tells me that something's happening here. Okay, so that's us here. The thing to notice, and I'm getting some reconnection issues here, so I don't. Hopefully the internet's staying up. Hopefully it's staying up. But what you'll notice is that we've printed a higher high here. We printed a higher high, and it's happening on volume. So TRB is actually a really nice one. I'm actually going to mark these down. So TRB and VRA, those are good looking charts, and they're starting to get somewhere. So this has printed a higher high in the weekly chart, which is really good. And so on the daily chart, what I would look for is you've got to see the price hold this trend line. So if it does come down to this trend line here, maybe like 40, it's got to hold that, because otherwise, you know what happens in bear markets. Every time that a coin has the temerity to stick its head up, it gets pounded back down again. But the really strong ones keep going like this. They keep going, they get pounded down until demand keeps pushing the price up. So that's going against the rest of the market, which is good, but it's the volume which is keeping things up. So that's a nice looking coin. All right, next one is Chainlink from John. All right, good to see you, Marcos. Let's see, Chainlink. Here is Chainlink. Okay, so here's the deal on Chainlink. Chainlink is still bounded by this longer term trend line. So you can see the price just came up to this trend line and got immediately rejected back there. So the bullish outcome from this would be is if you see a high and tight consolidation up in this area, if we see this go high and tight, that's good. That's what you want to see, because eventually you'll see the break from here, especially if the volume tails down into here. Eventually you'll see the break from here. But watch that trend line. And I would have, quite honestly, unless you want to play within this, I would avoid this one until it's able to break above the trend line and get some distance there. Because if you look at this versus the longer term move on Chainlink, I mean, Chainlink goes up to $52. And right now it's down at 7.5. So if you lose 50 cents of that waiting for it to break above the trend line, it's not going to hurt all that much. This has got plenty of overhead space to run on this one. Okay, so that's Chainlink for John. Sorry about the audio breaking. We may have had a couple of interruptions here. It seemed like there was a couple of interruptions in the stream, so hopefully this is still working. Okay, let's see. Marco, let's see. Back and forth in the same range. Oh, yeah. It's supposed to do that. So let's look at Ethereum. Ethereum has not really impressed me lately. Ethereum is just playing in this. This is really sort of a bull flag, if you will. But it's not as strong as Bitcoin is. So it's just kind of playing out in this really ugly range. And this is, quite honestly, Marco, this is really hard to trade. It's really, really difficult to trade in this range. So, keep your eyes on the anchored VWAPs, because those are going to be overhead resistance for right now. These lines that go back to, say, like the March lows, and we could set one up from the January 1st lows, those kind of things. So it's holding pretty steady. And then this one here in orange goes all the way back to November of 21, the highs back here. So all of that's overhead resistance until we smash through it. What's missing from this, though, is volume. There's no volume to drive the price higher. So until you get volume, none of these are going to go anywhere. And the volume may come in on the next, panic. May come in the next panic. Okay. All right, we're getting near the end of our list, so if anybody else has any pairs, any tickers that you want me to take a look at, please list them in the room. Otherwise, we'll be done shortly here. Okay, so next one I'm going to look at is Rune. Rune. Okay, Rune versus Tether. And this one's looking better. You can see way back here in 22, we were looking at aggressive buys, and those never hit. So this is a big, long base that it's in. Big, long base, and that base is there at $3. So this one needs to finish that base. It's got a lot of work to go. But what you've noticed is that the volume is starting to pick up on Rune. So that's good. Hey, Barry, it must have been a year. We'll take a look at Digibyte here in a minute. So, yeah, about the $3 level is, I think, the top of the base. So it can keep going up in that area this is starting to work and it's starting to get more volume in there, but it's got a long way to go before it gets up to the top of the base. And it's almost like, when a rocket blasts off, you've got to get through the lower levels of the atmosphere, and that's where it has all the friction. And then once it gets above the atmosphere, the air thins out. All of a sudden, it starts to really take off, and you get past max Q and all that stuff. It's the same kind of principle. Like once you get past that overhead resistance from the top of the base, all of a sudden you have fewer overhead sellers up there, and there's no overhead demand, so the price will just shoot higher through that. All right. Okay, next one. Let's go to Digibyte. Are they still even around? All right, so Digibyte. Oh, dear goodness. Oh, that is a terrible looking chart. I hate to say that. And you can see kind of the, and this is part of what's happening right now, is that we're going to, we had thousands of coins just a few years ago, that were all minted based on, hey, let's build a coin and, let's see if we can become rich on it. And if there's no business model to it, or we're even seeing things like the meme coins like Doge and, Shiba and stuff like that. Shiba's like, hey, we better build an infrastructure. Otherwise, there's really no point in us being around unless somebody wants to pump it for no apparent reason, which is like Pepe coin. That's no way to sustainably invest over the long term, is to look for these little shill coins. So Digibyte has got to find a way to build a business that is going to generate revenue. Otherwise, it doesn't matter what I think of it. It's what the market thinks of it right now. And the market doesn't think too much of Digibyte right now. But we like you, Barry. All right, so let's look at Render Token. Render Token. Okay, so this one is doing okay. It's starting to get out of that base. It's got out of the basement at least, but it's up to a secondary range. Now, the thing I don't like is it was doing really well on this trend line. I'm sorry I can't draw this very well, but it was holding this trend line really well until the summertime here, and then what we started to see is former support has become new resistance. So I would expect this to have a very difficult time getting through this. In fact, it probably is going to roll over here. That's what the chart is showing, because all of these former support lines on the VWAPs are now going to be resistance. Former support becomes new resistance. Okay. I think we have cleared the list. Any last requests here from the good doctor before I disappear into the hinterland again? Okay, so we'll look at Aave. Let's look at Aave for Barry. Okay, so what's going on here? More ugliness. I mean, you could take 99% of the crypto charts and they all look like this, right? So we had this big pump back here in 21, and everything has they've just been selling the crap out of it until, at some point we're going to have another pump, but, when is that going to happen? I don't know. My sense is that will happen after we have the next crisis. Hey, Barry, that's the problem with spell check, right? Or autocomplete. Yeah, autocomplete will do it every time. Okay. Hey, Tekafu, it looks like we have another disconnect on the stream. All right, there we go. We're back again. So this one has got the same kind of thing. We have a big series of lower highs along here, and it's just going to keep on rolling around in the gutter until it's done. So that is Cardano. I don't know what's going on with the Cardano folks. And, okay. Hey, Tony, how we doing? Let's look at Front. It's not my intention to really throw shade on everybody's coin, but it's, that's what's going on. All right. So what's the big difference here in front? It's volume, right? Look at the volume that's come in. So somebody knows something, because there is no volume on this thing at all, and all of a sudden the volume has come in on this. Now, it's not holding trend very well at this point. So I would say this is where we can throw on our fibs on this guy. And so from bottom to top, it's already gone through the 61.8% retracement, which is right there, which implies, Tony, that it's going to fill in the triangle. So normally the 61.8, if the price can't hold a pullback past 61.8, then it's going to fill in the triangle. So unfortunately, this looks like it was all a rumor about something, which has not paid off so far. Hey, let's see. Laura wants to look at H-bar. And they're coming out of the woodwork now. All right. Good to see everybody out there. Let's look at H-bar. Perpetual. Tough looking chart. We'll go out to the weekly chart. And it's just all downtrend, guys. It's just all downtrend. So this one's got a long way to go before it's going to go anywhere. And it just doesn't have the volume to get up there right now, Laura. Bry, which anchored VWAP levels are you using? I mean, we can look at the anchored VWAP is, if we look at the anchored VWAP, we're just using high-low close, and we're setting a start calculation. So we're starting like the beginning of the year, and also a lot of these are from the March lows, and then we can pick other lows on here. So I'm just looking at specific dates, like the highs from 2021. Those are good ones. The beginning of the year, the March sell-off, which was the bottom. That's the way I'm setting the VWAPs on here. Mav is out in California now. He's back in the Bay Area. All right. Hey, Tig, how you doing? Jeez. Tig. Sneaks in the back door, doesn't even say hi. Oh, man. I miss drinking beers with you, dude. We'll have to do it again sometime. All right, so here is INJ. INJ is a pretty ugly chart, but notice we must have looked at this one. Not too long ago, because it has broken this trend line and now is making a series of higher lows and higher highs. So right now the current box is like up in this area. And as long as it holds above 6, I think that's good. As long as it holds above 6. Now, I want to warn you guys, the closing bell is going to go off in my platform, so it's going to be louder than hell here in about 5 seconds. So that's the current box that I'm looking at. I told you, it's just nasty. I got like 3 apps that are all up with a closing bell on them. Yeah, he's got a golden voice. Yeah, miss working with him. Okay, let's see. Oh, Jason is asking for Tron. Let's look at TRX. Tron is actually one of the better looking charts that I see in the top 30. So it's probably the best one I see in the top 30. And this one has just been absolute dog squeeze for the longest time. It has been. It's been a terrible coin. But it is just on the verge of breaking out from this big, long base here, above 9 cents. And it looks really good. Now, I wish I saw more volume on here. Volume would be really, really good, because it's not going to break above 9 cents unless it's got some volume to it. But right now, in the top 30, this is probably the best looking coin that I know of. Okay, so let's look at the next one, which is Quant. And so that's QNT. We'll do that versus the US dollar. This is all below resistance and heading lower. So There are better ones out there. This one's going to need to get above 120 to have any chance of breaking out. So this one's in rolling around in the gutter, just like most of them are. All right, Gerald, the other one you want to look at is Ocean. Ocean, let's see if this one's any better. Okay. Not so much, slightly better. Still trying to put in a base. Still trying to put in a base right now. And we could see that base like on this trend line here. So if it does get a break above 35 cents, this may be the beginning of something good. But it's going to have to break there, and it's not been breaking the last couple of days. Hey, Tag. Yeah, it was MAV, M-A-V, MAV. Are there brokers you recommend using for crypto? I would only, if you're going to use a centralized exchange, I mean, technically, do what I say and not what I do. Use a centralized exchange just to make the trades and then pull it off of there to your own wallets, unless there's a risk to doing that. However, I do trust Coinbase. I have kept things on Coinbase. I've not had any trouble with that. Gemini, I'm sure, is fine. Kraken, I'm sure, is fine. The other international exchanges, I am not allowed to put anything on anymore. It used to be that I could come in with a VPN and I could use any exchange. And now they've made it literally impossible. And that's mostly due to the U.S. throwing the weight around, which the SEC is just terrible lately. Anti-competitive, anti-innovation, anti-everything to do with crypto, because I think they want to drive their own USDC, right? They want to drive their own, central bank currency. So that's for you, Bri. Next one here, and this is the last one I think for today because I got a beer with my name on it waiting on me. So that's a good looking chart there, Stephen. Very nice. We're ending on a high note here. Something actually trending higher. So this is for all you guys out there. KASPA is doing some nice work here. Higher highs and higher lows. Look at this on the weekly chart. Weekly chart looks great. Really, really nice. And it's still like dirt cheap too. It's 5 cents. So this has actually got even better. I'm going to mark this down as well too. So we have 3 really good charts from today's session: TRB, VRA, and CASPA. Those are not recommendations to buy or sell, but merely the starting point of your research. But those all have excellent charts. So think of it this way. If a chart is trending higher, that is the market giving a big old thumbs up. What's happening is they're lifting the bid. They're lifting the bid higher they're bidding it up. That's what's happening with an online auction. It's not whether this is the fatal flaw that I see with most crypto investors. They get tribalistic behind one coin or 2 coins. They throw all their hope into something, or they get confirmation bias with the founder and say, oh, he is so cool. And they forget about the price. The price is the ultimate arbiter as to whether or not your crypto project is any good. So there you go. That's my only soapbox for today. I want to thank everybody for joining me here today here at Ready Set Crypto. And don't forget, if you're interested, you can always go out to readysetcrypto.ONE. readysetcrypto.ONE is our new platform. Give you a week of free trial, kick the tires, see what you think. And if you need some help, let me know. Thanks, everybody. You guys have a great week. We'll see you in the next one. And everybody, be good out there.